Will a recession inevitably occur in 2024? Well, based on historical lag times, a 2024 recession is very likely according to well-known macro analyst Game of Trades. Hello everyone, in today's video we will be discussing some macroeconomical indicators, taking a look at the charts and analyzing whether or not a recession will occur, and if it does occur, which type of landing will we get, either a soft landing or a hard landing. So if you like this type of content, make sure you hit that like button, make sure you hit that subscribe button, as it means so much to me. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can get a fine discount off your next purchase. So without further ado, let's begin. And let's begin with this X post by Game of Trades, because as I was scrolling through X today, I came across his post and I thought I'd make a macroeconomical video, because I do touch on macroeconomics just a tad, but I feel like I need to make a video so people understand the risks associated with an upcoming recession if one is to occur. So, and I quote, Game of Trades tweeted, "Recession searches have now collapsed, peaking in July of 2022. Back then, everyone was anticipating a recession, but now nobody is expecting one." Remember the yield curve, which we're going to look into in just a moment. The inversion is a reliable predictor of recessions, and we're going to look into why as well. Based on its historical lag times, a 2024 recession is very likely. So let's take a look at his post, yeah? Because he posted a picture as well, and it's this chart of Google searches containing the term recession. You can see that it dates back all the way to 2004, and since 2004 we've had 3 recessions. Yeah, actually no, I take that back, because it does not include the recession with regards to the tech bubble, which occurred in 99, 2000, 2001, etc. So it really only truly shows 2 recessions that's occurred since 2008. Yeah, we had the financial crisis in 2008, and we had the pandemic back in 2020. We also had a small sort of like recession scare, you know, in 2015, but that didn't materialize. So we've only had a few recessions since then, which was in 2008 and in 2020. And currently, it looks like we could be heading into a recession. Now let me explain why. So if we look at 2008, yeah, the first peak occurred in 2008, and that is when shouts of a recession were likely to occur. If we take a look at the charts, and we will get into the price of Bitcoin and what it means for Bitcoin if we do enter one, but let's look at some macroeconomical indicators. And if I find the right one, yes, it is this one. So if we take a look at the chart, guys, I've marked out when a recession has occurred in past history since the tech bubble, but the chart doesn't include that, so let's ignore this one and let's focus on the financial crisis onwards. So if we go back to his post, the first shouts of a recession during the financial crisis were pre-2008. Yeah, so if we go to pre-2008, it was probably around this area right here. Yeah, and then recession, the term recession according to Google Trends, declined massively. Yeah, and then it peaked up again. So what normally happens is that recession scares occur, and I'm going to come to the yield curve as well when I discuss this. So with recessions, guys, according to the yield curve, when the yield curve first inverts, that is when recession and the term just start making headlines. But that does not mean the recession happens there and then. It is actually the second peak of when the term recession starts hitting the headlines. That's when the real recession hits. So this second peak of the term recession occurred late 2008, early 2009. Yeah, and that is when the actual recession occurred, which was right here going all the way down here. Yeah. Now let's take a look at the pandemic as well, because that is what the chart includes. So if we take a look at the chart, you know, the first peak occurred in late 2019, which was just around here. Yeah. But the second peak actually occurred in early 2020. And what do you know? When did the pandemic actually occur? Well, markets crashed in March of 2020, and that is when the recession was considered a real thing, which was right here. So you can see in past history that it's not the first peak where we actually where a recession actually comes to fruition. It's actually the second peak where a recession occurs. Yeah. So if we take a look at today, you know, the first peak occurred in late 2022, July of 2022 to be exact. Yeah. And July 2022 is right here. Yeah, right here or so. With this yield curve, and let's take a look at it now. Let's take a look. So the yield curve first inverted back in July of 2022. What do you know? Now the yield curve is starting to uninvert. And when the yield curve uninverts, that is when the recession actually occurs. So let's take a little read here. An inverted yield curve occurs when yields on short-term bonds rise above the yields on longer-term bonds of the same credit quality, which has proven to be a relatively reliable indicator of an economic recession. The inverted yield curve can be observed when the yield curve spread between long-term yield and short-term yield is less than 0, as shown in the left two graphs. So if we take a look at the historical treasury yield spread, the 10-year and the 2-year, you can see that the yield is starting to uninvert. And when it starts to uninvert, if we take a look at history stemming from 1980, it is when the yield curve uninverts back over the red line, which is marked at 0%. That is when the recession actually occurs. It has happened the last 7 times. So 7 out of 7 times, an inverted yield curve has successfully predicted a recession. So what does that mean? What does that actually mean? So let's take a look at some indicators. Yeah, let's take a look at some indicators. And I first want to look at interest rates, which we're currently on right now. If you remember, if you watch my videos at the beginning, you know, you would have seen that the predictor or the probability of a rate cut for the first rate cut was expected to occur in March of 2024. Now this has changed. Yeah, you can see that the Fed is currently analyzing, and it's both people that are hawkish and both people that are dovish, and they mix them all together to come to a probability and suggest when they believe the first rate cut will occur. And currently that is not until May of 2024. Before it was in March, but now it has flipped the script and we are believed to pause up until May of 2024. So that is right here where I marked here, this orange line right here. And typically when the Fed pivots, interest rates, yes, cutting them is bullish. Yeah, cutting them back down is bullish to these levels right here. It is bullish for risk on assets. Yeah, that's just a true known fact. But a lot of people oversee that and they don't think outside the box. It is when we get our first rate cut, markets don't like that. And even though it's bullish for risk on assets, markets don't like that because they know that something within the economy has broken, hence why the Fed needed to cut rates in the first place. But with a recession, yeah, just solely basing off a recession, nothing means anything up until the unemployment rate starts to rise. If we take a look at past recessions, and let's include the tech bubble, you can see that the unemployment rate rose significantly. Just like in the financial crisis, unemployment rate rose significantly. And just like during the pandemic, unemployment rate rose significantly. So only until the unemployment rate rises significantly, we are technically not classed into a recession. Yeah, which is why the Fed is pausing rates for higher and longer. Yeah, up until the unemployment rate starts to do something like this, we are not into we will not head into a recession. If we take a look at inflation, yeah, we all know that the Fed wants to meet their target of 2%. Yeah, and the inflation rate currently right now is 3.4%. It is harder to go from 3.4% to 2% than it was for inflation to go from 9% to 3%. That's just the way it is, because people love spending their money, and that's just how it works out to be. It's harder to bridge that gap from 3 to 2 than it is from 9 to 3. Yeah. So until the Fed meets their target of 2% and until the unemployment rate rises significantly, we are technically not into a recession. What I believe is that a recession will definitely occur in 2024, but the $1,000,000 question is, will it be a soft landing or will it be a hard landing? And again, that depends on the data that comes through from the government. Inflation rate, unemployment rate. So as the interest rates stay higher for longer, theoretically speaking, inflation should calm down and reach that 2% goal that the Fed wants. But the higher they leave interest rates, yeah, the longer they leave interest rates higher for longer, the unemployment rate will start to tick up. So the Fed needs to balance things properly now. They need to say, okay, how long can we keep interest rates high before we actually essentially mess up the economy and we throw everyone into a recession and then an unemployment rate goes crazy? Yeah, that is the $1,000,000 question. Will we get a soft landing or will we get a hard landing? And if we take a look at the Bitcoin chart, I'm just going to throw some targets out there with relation to either a soft landing or a hard landing. So if we get a soft landing, yeah, given that we enter a recession, if we get a soft landing, you should 100% expect price to at least retest the highs of 2023 in June and in April. You would at least expect Bitcoin to come back and visit the 32k level if we get a soft landing. Yeah. We could even, depending on how severe the soft landing is, we could even head back to this level right here, which is around 25k. Yeah. If the soft landing is too strong, then we could revisit the 25k. So what happens if we get a hard landing? Yeah, well, we saw last time when the Fed achieved a hard landing during the pandemic, it was right here. Yeah, and what stemmed from it was a crazy drop by Bitcoin. If we take a look at the percentage decrease in Bitcoin, if we just match it now, Bitcoin dropped 63% from the hard landing. Yeah, 63% it drops from the hard landing. So if we were to drop 63% from now, or let's just take it from the top, 63% drop would result in Bitcoin coming back to 17 or 18k. Yeah, I do expect if a hard landing is to occur, we revisit these lows right here. These lows right here. If we do get a hard landing, I do expect the Bitcoin price to be sub 20k. 18 to 20k to be exact. Now, if it's a very severe recession, yeah, like the tech bubble or the financial crisis, and there's just so much FUD, so much negativity, so much fear, then Bitcoin does have a chance of either putting in a double bottom or making a new low and coming back to the top of the mid-cycle peak in last cycle. Yeah, that is just how I think. Do I believe Bitcoin will go sub 10k? I highly doubt it, unless like World War III breaks out, recession global, and just something crazy happens. then Bitcoin could make it, but even though I highly doubt that. But we could revisit or retest the lows of the bear market low in 2022. That's still highly unlikely. Revisiting 18 to 20k, I believe that's probably my worst case scenario with regards to a hard landing. But if we get a soft landing, at least expect a 26k to 32k Bitcoin. So that is it from me today, guys. I hope you all enjoyed the video. If you like this type of macro content, I will cover more in more detail. Just let me know in the comment section down below. Hit that like button, make sure you hit that subscribe button, and as always, it's been your boy J1 General. Thank you and goodbye.